NIO is on an absolute tear, and there's a reason for that. Just one reason is multiple upgrades, and more specifically, JP Morgan upgraded NIO to overweight with an $8 price target from $4. And we know that most stocks trade at a forward multiple greater than the company is currently valued at, which means NIO will likely break $8 in the coming few months before the new year and go well above $8. Like I said, most companies trade at a forward multiple PE ratio that is well above their valuation. And right now, NIO is trading $1 and change, $1.25 to be exact, below their valuation. So right now, they're significantly overweight. Now, I called this on NIO. I said this 4 months ago when I bought thousands of shares, and there were many comments saying you're going to lose your money, bad investment. I wouldn't do that if I were you. And once again, I was right. Good stock, good timing, plus time itself equals money. So I'm up almost $10,000 in my one account and $40,000 in my other account. So essentially $50,000 profit in just a few months. And I do this continuously in my Discord. We did it on XYZ. We did it on Meta, Hims, Robinhood, Palantir, SoFi, SoundHound. The list just goes on and on and on. This is what we do. We're going to dive in and talk about NIO and what lies ahead for this company. If anything I say confuses you and maybe you just don't understand what's going on or how I was able to find NIO at the right time or get into it, and you want to make the profits that you're seeing on the screen and you don't want to miss these kinds of plays, the link to get started with Discord is below, and I look forward to helping you on your financial journey. Two of China's biggest noted vehicle makers, NIO and Li Auto, are about to report their second quarter 2025 results. Li Auto will release its numbers this Thursday, while NIO will follow next Tuesday. Ahead of their results is the question, which of these EV players looks better positioned right now? Looking at Li Auto, it has built its success on hybrid approach. Its extended range electric vehicles combine EV benefits with the reassurance of gasoline-powered generator, easing range anxiety for the Chinese drivers. The company's popular L series, L6, 7, 8, and 9 have captured strong demand. Li also ventured into pure battery EVs with the Mega last year, while recently adding the Li i8, a 6-seat family SUV, to its lineup. Another model, the Li i6, is expected to debut soon. NIO, on the other hand, has gone all in on pure EVs. Its portfolio includes broad range of sedans, SUVs, such as the ES6, ES8, EC6, ET5, ET7, and ET9. The company is also set to launch its redesigned ES8 later this year. Beyond the NIO brand, NIO is expanding with Onvo, its mass market division, which has already launched the L60 and the L90 with a third model on the way. Its premium small car brand, Firefly, started deliveries in April. This three-pronged strategy highlights NIO's ambition to capture different segments of the EV market. In terms of sheer numbers, Li Auto continues to outpace NIO. For the second quarter of 2025, Li delivered 111,074 vehicles, while NIO delivered 72,056. However, the growth picture tells a different story. Li's deliveries were only up 2.3% year over year, suggesting demand is stabilizing. Meanwhile, NIO's deliveries surged 25.6% compared to last year, signaling a stronger momentum shift in its favor. Margins are a critical measure of EV makers' financial health, as it is with all businesses. NIO's vehicle margin climbed to 10.2% in the first quarter of 2025, an improvement of 9.2% from a year ago. The gain was driven by better scale, lower cost per unit, stronger efficiency in its supply chain. Li Auto remains ahead in this metric. Its vehicle margin stood at 19.8% in the first quarter, slightly up from 19.3% in the year prior. The company's ability to maintain high margins speaks of its cost discipline and pricing power. For now, Li holds the edge on profitability. The balance sheet comparison tilts in Li Auto's favor. As of March 31st, 2025, Li Auto held about $15.3 billion in cash, giving it an ample resource to fund research, innovation, and expansion. NIO's cash position was $3.6 billion, far smaller in scale. Additionally, NIO's long-term debt to capitalization ratio is 75%, while Li Auto's is just 10.8%. This makes Li Auto far less leveraged and financially sturdier. And although $3 billion isn't as much as $15 billion, $3 billion is still a lot, $3.6 billion to be exact. Great starting point for NIO, especially considering JP Morgan and Chase just gave an upgrade to overweight on NIO with a price target of $8. This shows a very strong growth potential in NIO, and NIO is very likely, almost for sure, to break into the $8, $9, or even $10 range by the end of the year, beginning of next year. The real face-off between the two lies in their technological visions. NIO's big bet is its battery swap network, part of its battery as a service model. This allows drivers to swap out depleted or fully charged ones in just minutes. With more than 3,400 swap stations and more than 26,000 chargers already installed, NIO is building a network that could become a game changer in EV adoption. The company is even constructing a new facility in Wuhan with plans to roll out 1,000 new swap stations annually. Li is focused on autonomous driving. Its Li 80 Max and Pro systems already support advanced urban and highway navigation, powered by NVIDIA chips. The company is pushing toward level 4 autonomy. Management has even hinted at developing humanoid robots after it achieves that milestone. While futuristic, Li's current ADAS features already provide safety and convenience, making autonomy a core strength. However, I will note that this is sort of the model that Tesla is taking, and since we already have a Tesla that's way ahead of Li Auto, it kind of puts stagnation on Li Auto, which is why the price on Li Auto is stabilizing, which is the reason why their growth is also doing the same thing. They're essentially taking the same path as Tesla for the most part. They're essentially not a ripoff, but like a very generic Tesla in Europe. I don't want to say that and come off in the wrong way, but they're following the same path, which is why they're stabilizing. NIO, completely different path, proprietary, battery as a service, battery swap, their power swap model with 3,400 swap stations. If they were to make it into the world market in America and Europe and everywhere, fully integrated, Canada, Mexico, everywhere, they would take the fight to Tesla like nobody else. NIO has much greater potential for growth than Li Auto. In fact, it's been said already, basically without saying it. So this is what makes NIO so powerful. Stock performance paints another interesting contrast. Over the past 6 months, NIO shares have risen 27%, reflecting renewed optimism around its growth prospects. Meanwhile, Li Auto stock has fallen 25%, weighed down by slowing delivery growth and cautious sentiment. Just like I said, valuation adds another layer. Both stocks trade at relatively low forward price to sales ratios compared to their 5-year averages, but NIO trades at a lower multiple than Li. That makes NIO more attractively valued at current levels. NIO appears to have stronger growth runway, which is very obvious. The consensus estimate for NIO sales suggests growth of 50% in 2025 and another 36% in 2026. This is exactly what I said. Right now, the current price $6.75. The stock price going to $10 would be 50%. That's literally what I just said. So it's being said online. It's being said by analysts, articles, and of course, the upgrades from multiple analysts. NIO is likely to break $9 or $10 by the end of the year. Get ready. I called this last year. This signifies a 300% return since I called this out January and February of 2025. Its bottom line is also projected to improve meaningfully, with the loss expected to narrow to 32.5% this year and 68.2% next year. Li Auto's forecasts are more tempered. Sales are projected to grow just 6% in 2025 before accelerating to 36% in 2026. Its 2025 earnings are expected to decline 13% before rebounding with a 61% jump in 2026. On top of that, recent analyst revisions have trended upward for NIO, while Li has seen downward revisions. Sign of growing confidence in NIO and more cautious sentiment toward Li. Both NIO and Li Auto have carved out unique strengths in China's EV market. Li Auto extended range EVs, strong balance sheet, and higher margins make it a stable player. However, slowing delivery and a strong sell raise concerns. NIO, on the other hand, is showing accelerating delivery, strong growth forecasts, and more attractive valuation. Its battery swap strategy and expanding multi-brand portfolio also give it a powerful long-term catalyst. With a rank 3 of hold, upward earnings revision, NIO is better positioned than Li Auto, which is exactly what I've been saying. So we're going to take a look at NIO on the chart. If you missed this call and you want more calls like it, like the Meta XYZ, the HIMS, Bank of America, PDD, and all these other trades I'm putting out in Discord that we're just printing tens of thousands of dollars on, which you can see right there on the screen. The link to join Discord and get started is below. Remember, don't put off anything today for tomorrow, because when you do that, somebody has already put off yesterday for today and you miss out on opportunity. Never put anything off. Take advantage of things while you can right now. Let's tackle your portfolio. Let me show you what you're doing wrong. And I look forward to helping you and seeing you real soon in the Discord. Like I said, the link to get started is in the information box below. So looking at NIO on the charts, I'm going to show you guys there is a supply zone back here in October 2024, right around 750. This is an area where people were buying and the stock dropped and they're now holding. And when the stock gets back up there, there's a lot of supply and they're going to sell it most likely. In order to overcome a supply zone like this, you need good catalyst, because if there's no good catalyst and people are just buying the stock and the stock price starts to go back up, as soon as it gets here, all the people that bought here and were bag holding for 6 months are going to sell. There has to be more buyers than sellers. And typically this isn't always the case. You'll see a stock will go up like this, come back down, go back up, come back down, and then finally it breaks through. It takes a lot of time. However, with a positive catalyst like a JP Morgan upgrade to $8, when this is under $8, $7.50, this is a catalyst that will push it through. This is technical analysis. This is just the very edge, just scraping and scratching the surface of how this works that I teach in my Discord. But right now I'll give you a very brief overview. And when there's an upgrade happening and the stock's coming up, these investors or bag holders at the particular time most likely won't sell now because they know the price target is up here. So now they can make use of their time by not only breaking even or a small loss, they can make a small or even large gain. So they won't sell. There'll be some people selling, but instead of having massive resistance, it'll come through, consolidate, push through, come back, and then just run. It'll just be a straight uptrend. It'll slow down a little bit, but most likely will go straight through. And this is what happens. And there's a lot behind it that goes into it. This is just scratching the surface very briefly. But this is a very strong supply zone, and it lines up with this area right here at 750. Once it breaks 750, we're going all the way to $10. The next resistance is 950. We have one right here, and we have another one right there. So there's two zones of resistance, 750 and 950. And then the very next major resistance point is going to be 1150 and 16. So if it breaks 850, it is almost surely going to 950. And then if it breaks 950, then it's going to go through, and the next resistance is actually around 13. There's actually one at 1050, 13, and 16. So it's very likely this stock could go to 10 or even $13 by January. I think realistically, $9 or $10. Like this 950 resistance, we're going to be up here somewhere most likely, but it could go higher. If earnings is a bust, I think it could stagnate the stock growth a little bit. We do have another earnings, I believe, in December, January, which will also help out a lot. So if that's a good earnings, it could make up for this one. Plus, there's interest rate cuts to think about as well. And tariffs, if tariffs continue to get better and become abated and get eased, that will help NIO. Interest rate cuts will help a little bit because of the levity and the overall feeling in the stock market. If Tesla does well, it's sympathy. So those are things to think about with NIO that are all going to help it. This earnings doing well will also help them crush. If they're in the green, it'll be the first time in 4 quarters, really. In a year, they've only beaten earnings once. If they beat earnings this time with the upgrade, it's going to fly. If they crush earnings, it's going to fly even more. So if they beat or crush earnings coming up, it's almost for sure, not 100%, but very, very likely this stock will be way up in the $7, $8 range or higher. We could see NIO maybe even potentially trek into the 8s or even 9s if they crush earnings. And then we get interest rate cuts to follow and tariffs are eased or keep being abated like they are, and things keep going in this direction and the economy's okay. We could easily see NIO in the next 30 to 60 days trek into $9 territory. It's possible. There's a lot of people that are on the sidelines, a lot of people that are bag holding that are now going to dollar cost average. There's a lot of investors that have average prices of 16, 10, 12, 8. And as soon as they crush earnings, if that was to happen and the economy is better with data that's coming out, they would dollar cost average at $7 or $8. They're probably already dollar cost averaging now. This is a catalyst that is just looking to explode. We're looking at tariffs, interest rates, economy, Tesla, NIO's earnings, as well as if they beat or meet this expectation by a certain amount. These are all things to think about, but NIO is poised very, very strong. And right now the floor for NIO until earnings at least is going to be $6, maybe $6.50 actually. It's very strong, but we're hitting a peak right up here on the 1 hour and 4 hour chart, which is in line with the beginning of this resistance at 680 that goes all the way through 750. But I tell you what, there is a very strong possibility possibility that NIO will trek into the $7 range leading right up until earnings. Let's just hope that NIO can deliver on this earnings for the first time in a year. Let's see what NIO can do. If they miss earnings, it could go back to 550, 575, or 6, somewhere in this range. Could, or it could just consolidate in the $6, $6.50 range. It's really going to depend on the sentiment. If they miss earnings, but their future guidance is better than we expected or really strong, then it might not drop much. But if they miss earnings and guidance is bad, or we get a shocker that isn't good, it'll go back in the $5 range pretty quickly. So there's also that to think about. Everything, in my opinion, is going to be a meet or a slight beat this time around, but we'll see. It's looking very strong for NIO. I would be looking to dollar cost average right now. Buying in the $6 and $7 range is okay. If you buy in the $6 range right now and the stock goes down to $5, buy more. NIO's been upgraded by JP Morgan to $8. This stock is very likely to run to $8 or $9 based on all of the analyst ratings by the end of this year, which means even if you're down for the next 2 months, the following 2 and 3 months, you're going to be up again. This is how you dollar cost average. My students and I were in the red on Microsoft when we were buying the dip back in March, and we made tens of thousands of dollars, hundreds of thousands of dollars in Discord on Microsoft and Meta and Tesla, Google, Nvidia, AMD, all of these plays. Then we printed on XYZ because everyone was buying PayPal, and I told my Discord to buy XYZ, and we printed. You can see those pictures right there on the screen, PayPal tanking, and the trade alerts that I put out on XYZ, and the trade alerts I put out on Meta, and the profits made on Meta. And I told you guys back in February to buy NIO. If you bought NIO, you are up a lot right now. This stock is up from 360 when I called it back in February and January timeframe, 360 to 660. The stock is already up 2x since the beginning of this year. If you guys want to take your trading to the next level and you want to grow your portfolio, I would love to help you. The link to get started in Discord. If you want to make the profits you're seeing on the screen and you want to get started and you want to make the most that you possibly can, let me show you what you're doing wrong so you can live the life that you deserve. I'm living my best life right now because of options and because of the stock market, and my students are as well. I have students that are on boats traveling the world while they make money, flying on airplanes, doing whatever they want to do and making money. They're doing it right now, and you can too. I look forward to seeing you on the next video or in the Discord real soon. The link to get started is below. I'll see you in the Discord or the next video. Take care of yourselves, fam.